Welcome to another weekly webinar here at Route Consultant. My name is Josh Gregory. If you have never been to one of these before, I am the director of our consulting and training teams here. I work with buyers who are getting into the space, trying to get advice on how to get in. And I also work with contractors trying to optimize their businesses, help them in a variety of ways. But all that to say, this probably won't be the last time you work with me if you're working with us in some capacity. But for everybody else who's been here before, welcome back. This is designed as a place for us to all come together to learn some information. Whoa, my eye decided to freak out. To learn, ask questions, and hopefully still have a little bit of fun. But before I get into everything to expect for today, just have a quick disclaimer that I have to read as I do every week. So Route Consultant is not endorsed by and is not recommended by Federal Express Corporation, FedEx Ground, or Amazon. Route Consultant is not sponsored by, is not approved by, is not associated with, and has no connection whatsoever with Federal Express Corporation, FedEx Ground, or Amazon. So all that means is you're not going to be hearing any materially non-public information today, but we will make sure that you hear some helpful information nonetheless. And just general format, if you've never been to one of these, in just a little bit, I'll introduce our co-host. But before that, I'll go over a couple quick housekeeping things. Then once we're done with the presentation and the content for today, we will completely open this up for Q&A. And so you will be able to ask whatever questions you have, and we'll try to get to as many of those as we possibly can. And so when you are putting your questions in, make sure that you put them in the bottom at the Q&A button. If you type it into the chat, I won't see it. I won't see your question, so you won't get it answered. So make sure you type it into the Q&A button at the bottom. The other key thing to remember when it comes to the Q&A at the end is that there is a very important rule here at Route Consultant that in order for us to answer your question, you first have to answer ours. So the question of the week this week is there a movie that you have seen more than 10 times? If so, why? Like, what makes it so great? Or what's the reason that you've seen it that many times? And if not, just name a movie that you've seen the most number of times. And you can throw that in as an answer into the Q&A, then type your question. We'll read them both. And I'll answer that question at the end as well. Quick heads up too, on the events perspective, we do have our first in-person summit of the year coming up. That's a new investor summit designed to basically be a crash course to teach you as much as we can in a 2-day short period of time. So that one is coming up on February 6th and 7th, and that's in our office here in Nashville. And then for anyone on the West Coast or in that part of the country, we do have our first road show of the year coming up, and that is on February 23rd, and it's in San Diego. So that's coming up very soon. We're focusing that road show on education around all the new tools and technology that you can look to leverage this year in 2023 to be really successful. And this is completely free to attend. We'll provide the food and drinks and the education. So hopefully I will see everybody there who's in the area. So you can just go on and register, and it's on our website. It's also in the chat, a link to register. So hopefully we'll see you guys in a few weeks in San Diego. Now, just really quickly, the one new listing we have this week is a line haul listing in Northeast Illinois, and it is 3 line haul runs at just over $1 million, 2 dedicated team runs and an unassigned team run. Has a spare tractor as well. And so if this is the type of business you're looking for, the area you're looking for, then just reach out to our team. That's the new listing for the week. 3 runs at just over $1 million. Now that I've gotten through the housekeeping, so my co-host today is Leland Mize, and we have brought him on to give some updates around Silicon Ledger in 2023. So Leland, if you want to go ahead and jump on, and let's see. Oh, there you are. I see you. So if you just want to give a little, just a 2-second introduction on yourself, and then go from there.
Yeah, sure. Thanks, Josh. It's good to be back with you. Today we've been on here a few times, and we've kind of got a little bit of a different agenda today. We're going to address some of the more commonly, frequently asked questions that we're encountering. And just as a refresher, my background is I've been working with Spencer right at 6 years now as CFO of his different companies. He's got several. And before that, I was in healthcare and public accounting. Originally a Mississippi boy, been in Tennessee now for 6 years and love it. So the focus today with being related to Silicon Ledger and the employee retention tax credit, I want to go ahead and bring on Jesse Morton and Ray Roth real quick. If you guys would turn your calendar on or your camera on. Great. So Silicon Ledger has been doing this now for about 18 months, and there are some partners that we work with over that period of time, and Stout is certainly one of the biggest ones there. They've been a massive help to us as we've worked with FedEx contractors like yourself. And so I want to give them an opportunity to introduce themselves, their background, why they're good in this space, and then we'll move on to some of this other content. Jesse?
Thanks, Leland. So my name is Jesse Morton. I'm a managing director with Stout. Quick background on Stout. We're a global financial advisory firm and investment bank, and we have 900 employees in around 20 offices domestically, a handful in Europe, a handful in Asia. And I've been working on CARES Act related assistance for literally thousands of businesses since about a week after the CARES Act was passed, and have been working with ERTC clients since September of last year, so about 16 months. And I lead that practice along with my colleague, Ray Roth.
Well, I'm Ray Roth, director at Stout. Our role at Stout with the employee retention credit is to quantify the impact that government COVID orders had on your business. And we leverage our experience with quantifying damages in complex litigation, as well as conducting fraud investigations and running compliance monitorships, where we work both for and against the government for those types of roles. So we feel we're very well suited to take a causal event, in this case, the government COVID orders, and put a number on that. And then present that in a way that we think the government will want to see that. And that's used as the initial determination of eligibility and for what periods you could calculate the credit.
All right, great. Thanks, Ray. So what I'm going to do here is share my screen, and then we will just kind of dive in. And so we'll spend just a minute here talking about the just what the ERTC program is, just in case there's someone here that haven't gotten some level of exposure to it. Ultimately, this is a program that was put in place to assist small businesses with the impacts of the mandates on their business during what really stems to be about almost a 2-year window of time. And so this is a way that employers have a way to be compensated for some of the challenges. And there are some, I think this one slide here really is a good example of why there's so much confusion around the employee retention tax credit. They made an initial, they passed an initial legislation in March, or for the period March 13th, 2020 through December 31st, 2020, and then had 3 subsequent acts beyond that. And one of those acts did away with disallowing the employee retention tax credit related to employers that had already participated in PPP. And so just the ins and outs of the 4 different real acts here created a level of confusion around what employers were eligible, what does it even mean to be eligible, how much could I be possibly eligible for, what might get disallowed because I participated in PPP. So it became a pretty complex endeavor to be able to find out how to apply and make sure that you are meeting the proper parameters to properly apply for the credit. And so if you're one of those out there that has some level of confusion around this, you are not alone. And I think it's a good indication that, you know, the IRS doesn't make much easy. And this is just the latest reminder. So I think that covers, pretty much everything here. So
if I could add something there, Leland, you know, on those rule changes, you know, one of the general themes with some of these is the qualifications were relaxed a little bit and the credit became more profitable through these rule changes. So with any government type program, there is going to be scrutiny and you got to do it the right way. But as time elapsed through these periods, the rule changes were made so more people can take advantage of this credit.
Yeah, it's a great point. Thanks, Ray. All right. So how long, let's just start here. How long does the process take? We get asked that question all the time. And so we've got a few points of context here to provide. So, you know, for most clients, the application process takes 60 days or less. Really, that comes down to, you know, the quality of the information that we're given to be able to support the impact, if there is an impact, and for what quarters that impact is makes you eligible. And so if records are not quite as clean, you know, it could take a little bit longer. If questions that are asked of the applicant are not answered quite as quickly, you know, the process can maybe drag closer to that 60 days, but ultimately that is the window that we shoot for. And I'll give a little bit more context on that in just a minute. When it comes to how long the process takes, more often it is centered on applicants, you know, trying to get clarity on the IRS timeline. And so obviously we and nobody else has any control over how quickly the IRS can move on something, but we have seen a lot of improvement with checks being received more quickly. And so you've got a pretty wide range. What I would say most commonly is going to be a 3 to 9 month window. That's the better window or the more common window. Some have gotten it within a month, and some, you know, it's taken, you know, anywhere from 12 to 14 months. There's at least one key factor there that plays into how quickly you get paid. So essentially what's been established through as many of these as we've done now and some other outside resources is that if your credit, if a single quarter of credit is in excess of 200,000, that's generally a point where there's going to be an additional level of at least review. It's going to delay it. I'm not saying, you know, I'm not even going to use the word audit in that. It just means it's going to not be paid quite as quickly. It's going to have the opportunity at least for additional scrutiny, which is not something to be afraid of by any means, especially if you've done this the right way. It's just a matter of when we can look at what impacts, what factors are influencing how quickly the IRS is moving. That's one of the ones that have been identified. So again, most of our clients, as far as on average, are receiving it within 6 months of submission to the IRS. And so you can, in that case, look for this process to take somewhere from 5 to 8 months from the day that you sign an engagement letter to the day that you have your checks in hand from the IRS. Okay. Ray, Jesse, we got everything covered there. Anything you want to add?
No, nothing else on my end.
Okay, great. All right. Can you complete the process faster? And so I touched on this just a minute ago related to organized, accurate due diligence. So, you know, if there's a lot of going back and forth, trying to establish, you know, what factors were present during the mandate period, that can slow things down. But commonly, you know, we've worked with so many FedEx contractors at this point, and that's mostly what's going to be on this webinar here. We've been able to eliminate a lot of that because we just know this industry, you know, as well as I think anybody possibly could at this point. So some of those questions, that back and forth, can be eliminated just based on, you know, the experience that we've already got up to this point. As I mentioned a minute ago, we don't have any control over the IRS. So, you know, there is some luck of the draw to it where we commonly see people that applied months after someone else get their checks faster. And there's not ever really a good explanation for that. It could have something to do with what office within the IRS your state's returns went to. It could be the fact that the guy that day is pulling from the top of the stack instead of the bottom of the stack. I mean, there's just too many factors there to really control. But, again, I just want to, reemphasize there that a 5 to 8 month process from the day you sign your engagement letter to the day you receive the checks is the most common timeline that we're seeing with our client base. And then again, most of our clients report a 6-month wait for the IRS to send their checks.
Yeah, and I think while, and it's somewhat, I'm jumping ahead to this slide, but while we obviously have no control over doing it faster, things can certainly be slowed down. And so for anyone that's going through this process, while the IRS process is completely out of our control, I would encourage everyone to make sure that you're responding to requests, providing accurate information, reaching out and asking questions. That this is a team effort. And as a team that relies on getting a lot of information from clients through the completion of a questionnaire and supporting documentation, if we're not getting what we need to do our analysis, that certainly can slow things down. So the best thing to do is to make sure that you're monitoring emails, responding to calls if we call, and just doing everything you can to just get this done with. I realize it's a bit like ripping a Band-Aid off. Just do it. It will be time well spent, assuming that you qualify. And it's not that much time. It will be the best time that you've ever spent. But again, the faster and better you can complete the information that's needed, that certainly can expedite things on our end. And I think I speak for Silicon Ledger as well.
Agreed. Great. Thank you, Jesse. All right. So how are you different from other ERTC firms? So I'm going to add a couple of points of context to this here, though. The ERTC process executed through Silicon Ledger considers multiple options outlined by available IRS guidance to assess the level of impact your business may have experienced from COVID mandates. And that's, kind of a general way to point at really a few different methods that there are to determining eligibility here. So the smallest window of time is going to be related to the recovery startup credit. So if you're a FedEx contractor on here that started after February 15th of 2020, then the recovery startup credit is available to you. It's just lower, but also as far as lower, I mean lower credit available, but also the bar to be eligible for it is set a lot lower. So that'd be kind of the lowest and easiest method is under that, but it's for the shortest period of time, which generally is going to be Q3 of 2021 and Q4 of 2021. Then you've got your gross receipts test, which is going to be looking at either a 50 or 20% downturn in your revenue, depending on what your 50% in 2020, I should clarify, and then 20% in 2021. So it's really just going to be looking at top line revenue, how that was impacted. And if you qualify under that, you qualify for the quarters that you experience that downturn +1. So the last one is going to be your nominal impact, which is going to be what a lot of FedEx contractors qualify under, and being able to determine and measure the impact, as Ray was mentioning a minute ago, being able to document that and document what impact the mandates had on the business can also be that third method for determining what that eligibility is. So again, not only the IRS create a lot of confusion, there is some confusion over how you even qualify, what makes you an eligible employer, and then who are your eligible employees as well as another component to that. So from our case, some other things that differentiate us from other providers out there is that we've partnered with experts in the field. I mean, Silicon Ledger partnering with Stout in the way that we have to be able to leverage the expertise that they have in analyzing data and reporting on it is a rare thing, especially in this space. I think they do it at the very highest level. And then also partnering with BDO, which is a top 5 CPA firm in the world, and they calculate the credit and they prepare the tax returns. Silicon Ledger, in that instance, we don't ever want to be an expert at preparing a tax return. That is not what we wake up to do, and we obviously outsource that to make sure that the experience is the best for anybody that goes through the Silicon Ledger platform. So that's a couple of key components. We don't charge an upfront fee. I think you'll find, if you're familiar with this space at all, a lot of providers will charge an upfront fee, and that is a red flag for the IRS, because generally that's something that puts a burden on the taxpayer that was not intended, and we've never done that from the very beginning, and we will not do that. Another thing that differentiates us from other providers is the fact that BDO signs the tax returns. So there's a lot of providers out there that will do some level of work to document the impact, and then they'll calculate a credit, they'll prepare the tax return, and then they just kind of pass it across the table, let the taxpayer sign the tax return and turn it in. And there's really no paid preparer in that instance. And the IRS has already indicated that that's a red flag for them if a preparer is not in a position to sign the tax return that has been prepared on behalf of the client under the using the information provided by the client. So again, that's another red flag for the IRS. From day one for us, we've had one of 2 top CPA firms working with us and signing those tax returns before they're submitted to the IRS, just to eliminate the risk or the perceived risk there of the IRS giving additional scrutiny there when it's not necessary. Okay, again, are your methods proven? Results up to this date, approximately 70% of the clients who apply through Silicon Ledger have qualified for 1 or more quarters of eligibility. At this point, we've worked with about 1,300 FedEx contractors, and then a couple hundred other industry, small businesses within different industries. We'll go over some of those industries kind of toward the end of this, so you have an idea of what those are. But ultimately, a very high success rate for at least 1 quarter of eligibility. And keep in mind, there's a lot of factors in there of what makes someone eligible or not eligible. So a really strong success rate there.
Two things. I think Ray and I probably want to make the same point, but 2 things I wanted to point out. So one, just to emphasize what Leland was saying on signing the 941 forms. If a firm does not sign the 941s, again, the only reason why a firm wouldn't do that is because they don't want to stand by their work, and because they don't want to be on the IRS's radar for what are potentially improper claims. And we'll get into, in a couple slides, a specific IRS news release that warned employers of ERC mills like that. So if a firm is not signing the 941Xs, again, that is a huge red flag, if not should be a showstopper for anyone on this webinar, or anyone you know. And that kind of leads me to the second point, which is when Leland said that 70% of clients have qualified for 1 or more quarters of eligibility, I want to say that is a good thing, that it's not 100%. This tax credit is not a one size fits all. There are very specific eligibility requirements, and the fact that Silicon Ledger is only finding about 70% of businesses as eligible is a plus. If a business is saying we are qualifying 100% of businesses, that's a massive red flag. This credit absolutely was not designed for every business. There are very specific requirements. So you want a firm like Silicon Ledger that is willing to turn down a contingency fee after they've done the work, because it's the right thing to do, because it's saving the taxpayer what will probably be a massive headache and risk and audit and potentially worse down the road. So the 70% should be really a badge of honor that they are turning down 30% because they just flat out do not think that they are good candidates that they would stand behind. So again, I just wanted to make that point.
Yeah, I was thinking along the same lines with the pay preparer. One other thing I'll add to that is the IRS has standards when you sign as a paid preparer, and there are significant penalties if you do not meet those standards. And so that is why some firms are trying to circumvent that, and it is absolutely reflective of not standing by their work. Moving on from that, I think another key differentiator with the Silicon Ledger and Stout process is we've invested more than $1 million in time researching the various government orders that were in place and the duration of those. So that's a significant barrier to entry and investment we made that we know not everyone else is doing, but that is the backbone of demonstrating the eligibility for this credit, is the effect that orders had on your business. Some of these other firms that are not signing their work, not standing by it, they're not doing that. Instead, they're asking their clients to just write a paragraph or so saying how they were impacted, and relying completely on the client for self-certification. And I think that's asking too much when your specialty is in other businesses.
Agree. Great points. Thank you, guys. All right, Josh, I feel like we're about to maybe get up against the time here. Where we got till about 4:10, 4:15. What's our?
Yeah. Let's shoot for being done with and open this up to Q&A around 4:10, 4:15 time frame. Okay. But you still got some more time here.
Got it. Okay, just want to make sure. Thank you. All right, so let's do the Silicon Ledger protect me against audit. So, in short here, Silicon Ledger is in a position to coordinate resources to work on behalf of the taxpayer with the IRS should the need arise. Now, what that will commonly look like is going to be, since BDO is signing the tax returns, we work with them. We advise the client if needed, if it's something simple and easy to respond, just giving some point of clarity. And then most commonly, BDO will get involved if it's something a little bit more complicated on behalf of the taxpayer to make sure that the IRS has the information that they are requesting or looking for clarity on. So that process it depends on what method. We talked a minute ago about the different methods that are involved with qualification. There's one method that has a 3-year audit period. There's one that has a 5-year audit period. And so regardless, Silicon Ledger wants to be the first call if you get an IRS notice so that we can coordinate the appropriate response from the appropriate parties and make sure that you're protected in responding to them and not leaving you on an island, not leaving you on your own to respond on by yourself. And then how much does it cost? Silicon Ledger does charge a success fee, keeping in mind that we don't charge anything up front. So the success fee is 16% of whatever the total amount of the credit is received by the client. And a lot of people, kind of go into this expecting they're going to get one big check at the end of this, should they be determined to be eligible. That's going to be different checks. You're going to get one check for each quarter that you're eligible for. And so, you're not going to get one big check, but at the end, it's going to be multiple checks, and Silicon Ledger is due upon receipt of those checks at the 16% charge. Okay. Well, I have to pay taxes on the credit. So there's a lot of confusion revolving around this question, and some people act shocked that they would have to pay it, and maybe rightfully so. But ultimately, the taxpayer does owe tax related to this credit in the year for which the credit was claimed, in summary. So if a taxpayer is receiving a credit related to quarters in 2020, they're going to have to go back and amend their corporate tax return in 2020 to reflect the receipt of those funds. And the same applies for 2021. If it's 2021 quarters that you're eligible for, you're going to have to amend your 2021 corporate tax return to reflect the receipt of those funds. That doesn't have to be as scary a thing as it might initially sound. We've seen many FedEx contractors at this point that had already reflected a significant loss during those periods. And so, if there was tax due on the amount that was received, it could be offset by losses that have already been incurred, and they're going to be paying tax on the amount in excess of whatever their previously reported loss was. So it's not as easy as looking at what the how much did I receive and then taking whatever your effective tax rate is against that, because there are obviously other factors in play there that only your CPA, your tax professional, can help you with, because we can't know the facts and circumstances of everyone. We can only talk in general terms, and so you need to talk to your CPA about your specific corporate tax return. But it's not uncommon to see that FedEx contractors have lost money during that period, and so that fear of, oh my gosh, I'm going to owe a ton of tax, doesn't necessarily have to be the case. So I just want to give that point of clarity. Another key thing here, do I have to pay Silicon Ledger if I don't qualify? And the answer is no. If you are not eligible for the credit for any quarter, then it's a no cost obligation. Essentially, we absorb that cost. That's just part of the program to see if you're eligible. And, we'll tell you why you're not eligible if you're not, and give that point of clarity, but there's nothing that you would owe us to find out whether you're eligible or not. Okay, what is BDO? So we've touched on this a minute ago, but I'll just kind of revisit this for a second. BDO is the top 5 CPA firm that is preparing our tax returns. Earlier, depending on who's on this webinar here, we did work with Whitley, which is a top 20 CPA firm early in the process. They did a significant number of these for us, but they ultimately, we wound up transitioning to BDO, and they've been a great partner. But what that means for you, regardless of whether it was Whitley or BDO, we've been through this process with 2 different top 20 CPA firms at this point, and working with their national tax offices to make sure that what is being put in place to support the credit and make sure that the eligibility is truly determined. We've made it through 2 separate national tax offices of guys that are protecting their licenses. And, we consider that to be as hard or harder than getting through correspondence with the IRS, because obviously their licenses are on the line to be in a position to sign those tax returns, as Jesse was talking about a few minutes ago. And so that's a pretty big deal. And again, I think you'll find very few providers that have gone to those steps to make sure that the taxpayer is protected. So just wanted to highlight that for just a second. And how large of a credit do you think I could get? This is a very, very common question. Ultimately, it comes down to your facts and circumstances, and that's probably not the answer that you want to hear. But when it comes to averages, FedEx contractors, we're commonly seeing credits in the $350,000 and up range. So that is, just kind of as an entity basis that's been in place for the entire period of the mandated period. So 2020 and 2021. So I would make that note. And if you're looking in general terms, an employer is eligible for up to $26,000 of credit for every employee over that 2020 and 2021 period for each one of their employees. So just want to kind of highlight that would be kind of the cap per employee if you're trying to make an estimate. But obviously there are things that come into play there. If you're a contractor that applied for and received PPP, those funds are going to be backed out of whatever eligible credit there is under the employee retention tax credit, because they're not going to allow you or us to double dip in that way. So, there's some multiple factors in there as to who's eligible as an eligible employee. Obviously, I'm sure a lot of you have heard owner compensation is not going to be included, and blood relatives compensation is not going to be included in eligible wages for the credit. So again, just wanted to kind of give some other additional points of context there. All right. What if I sold my business in a stock sale? We've got this one a lot more common than I would have expected. And this is a tricky one. So ultimately, we're not in a position to advise a prospective applicant on if they've sold their business and they are wanting to go back and recapture the employee retention tax credit for when they were holding the business in 2020 and 2021. Ultimately, that is something they're going to have to take up with their own CPA and probably a tax attorney, because when that stock sale occurs, certainly there is the position that whoever bought the business and owns that stock now would have the right to go back and claim that credit as part of having bought the business. And so kind of like they have the potential for paying any liabilities that was associated with that stock sale, they have the benefits too in this way, or could. That's what I can say, is that they could get the benefit of the employee retention tax credit. So this is a common question, and what we advise in these instances when this happens is to make sure you talk to your CPA and probably get a tax attorney involved so you can make a determination of who really has the right to claim those funds. Is there any penalty relief related to the ERTC? Again, this is another pretty common question that we encounter. And this is really, in short, there have been people that are concerned that if they go back and amend a 2020 or 2021 return and all of a sudden owe tax because of the employee retention tax credit, that they're all of a sudden going to get penalized and interest and all of those things. And they have specifically addressed this, and it's ultimately a penalty that would be abated. So even if in the massive machine that the IRS is, you got a notice saying that you owed a penalty related to having underreported your income for that year, that is something that they've made note to that they would abate. You might have to correspond with them over it, maybe, if they don't get it right the first time, but ultimately you shouldn't have to pay penalties related to underreporting income in the year that you go back and amend. And again, that's your corporate tax return. Employee retention tax credit, your 941 payroll tax returns are what get amended. In this case, we're talking about corporate tax returns that you would have filed back in 2020 and 2021, just to give that point of clarity. All right, so Jesse, you want to take this one? This is, I think, probably more in line with some things that you could cover.
Yeah, thanks, Leland. So, I mean, again, the focus of our work with Silicon Ledger has been with FedEx contractors as well as some Amazon DSPs, but we've worked with businesses in many other industries. So we named just a couple here, but you know, the ones I want to focus on. So one, home builders and construction related contractors, gym, fitness centers, home care and home health care, restaurants is I mean, that's specifically an example in the IRS guidance. So those tend to be good clients, as well as daycare, childcare, preschools, private schools, and universities. I mean, if you look at this list, really the theme is, you know, think back. I know it's almost hard at this point and we all try and block it out of our heads, but think back to 2.5, 3 years ago and think about where, you know, kind of in your day-to-day, you know, that you had the most difficulties getting service, you know, really kind of anything face-to-face. And you can see here that there certainly is a theme of face-to-face client interaction. These are all, you know, good candidates, or tend to be good candidates. Of course, there are exceptions, but just something to keep in mind. If you know, you as attendees have other businesses or you know, friends and other contacts that may want to explore this.
Yeah, great. Thank you, Jesse. And another thing, just to kind of dovetail off of that, is if you're a small business owner on here and you've got this feeling in the pit of your stomach where you suddenly feel like maybe you haven't covered all your bases related to eligibility, we're happy to work with people in that position and what we would consider kind of a remediation engagement, where we're able to help determine what your position really could be in front of the IRS if it was put under any level of scrutiny. We have a tax attorney that we work with in those instances that would help kind of do an initial assessment and determine, what risks or concerns there might be for the taxpayer, and then we can kind of respond accordingly related to that. So if you find yourself in that position, it's not something you've got to feel like you're constantly looking over your shoulder or concerned about it. It's something you can be at peace with and understand where you really are if you'll take some time, and we can help you with that as well. So how do I get started? So ultimately, the easiest way is to email the email address here on your screen or call the number. You can also go to siliconledger.com, our website, and schedule an appointment there. Another thing that differentiates ourselves is when you reach out to any way here, you're going to be assigned a project manager that is assigned to you throughout the process. You're not going to be subject to just calling a call center or, just, emailing and that's it. And you don't have a person on the other end of the line. So that's, again, a benefit, hopefully, that people are having a great experience with having a person they can rely on to walk them through this and make it as easy as possible. None of it's going to be perfectly easy because obviously there's questions that have to be answered. There's documentation very often that has to be provided to support some positions. But if we know the path and we can just help you walk that path, you're in a much better position to go through this with us and navigate the overall process in a way that I think you'll find to be about as easy as it gets. So just wanted to mention that, and I think we're done there. So we'll take a few questions through Josh, and happy to see where that leads.
Yeah, so it's open Q&A. Anybody can submit a question. You can ask about anything, but while we've got everybody here from Stout and Silicon, I'd encourage to ask questions about that if you have them. Normally, I hold everybody to the question of the day. I'm not going to make everybody answer that right now. Leland and everybody over there at Stout, I'm going to save us so that we can get to the questions. But just my quick answer is it's a wonderful life because my wife's family requires it every single year. Okay, so first question here. So just a reminder for everybody, what is the federal deadline to file for ERTC?
Okay, so for 2020, you've got until April the 30th. I think it's either April 15th or April 30th of 2024. And then for 2021, you got until that April of 2025 window. So there's still a good runway here as far as if you're kind of finding yourself to be a little behind or you feel like you're a little behind, there's still plenty of time to take care of this if it's something that you want to pursue.
Okay. Yep. And is there still an advantage to doing it sooner rather than later?
Absolutely, because you never know when something will change with the government. So, I mean, it could be in your favor, it could not be, but I would never bet on the government doing anything in my favor if I was in that position.
Yeah, get the money while it's there, right?
Yeah, and I'll just add, I mean, the good news is that it would take an act of Congress to shorten that time period and end the ERCs. And typically, not all the time, but typically politicians are not big fans of cutting off aid to their constituents. So odds are it will go the entire term, but again, you never know.
Yeah. Okay, perfect. Next one here, just confirming for a question here. So if they're a trade contractor, so not FedEx, but plumbing, for example, if they reach out to Silicon, they can still have everything prepared in the same way through you guys?
Absolutely.
Okay, perfect. So yeah, it's not just that this is available, you can still reach out to the team, still go through the same process, even if you're not a FedEx contractor. And it's one of those things where if you think you might apply, it's why not reach out to the team, see if you will, and then find out if it's an option for you.
Yep. Great.
Yeah, and we've actually worked with quite a bit of plumbers, HVAC, painters, electricians, you name it. They tend to be extremely good candidates without going into detail, but they tend to be very good candidates.
Okay, perfect.
For any business, if you operated business as usual throughout the pandemic, probably not for you. Otherwise, happy to talk with you and understand how the pandemic impacted you.
Perfect. So it's a little bit of one where it's just it's something a little bit tricky has happened. I don't know if you've ever seen this before. So they received a check for Q3 2020, Q4 2020, and then Q2 2021, Q3 2021 didn't get it for Q1 2021. Should they be concerned? Does that happen ever where it's almost a quarter got skipped?
Well, it depends on what metrics were reviewed, but I have seen it. So if it's being measured, especially with revenue downturn or something like that, so I would need a little bit more context there. But if they've gone through us, then if they'll just email their project manager or reach out to the info and ask, to get some clarification, I can certainly search that out.
Perfect.
So, I mean, that would just be my initial read there, is it could be something as simple as that.
Perfect.
Yeah, and we're hearing of all sorts of issues from clients. I mean, we're hearing of checks being sent in the wrong amount and not the way you would expect either. Almost always they're overpayments. We're hearing of checks getting lost. I mean, you name it. So that's not surprising at all.
Okay. Got it.
One thing to keep in mind, the checks come in a nondescript envelope. It's not going to say, here's your hundreds of thousands of dollars. And some clients have actually thrown those away because they are so nondescript. So if you're waiting for it, open up all your mail.
Yeah. And our safety net for that is the form 2848, where we can reach out and look at the transcript of the IRS and verify this. So it's something that's common. We can handle it. Just reach out and we can help with it.
Perfect. Okay, so next one here. First off, he did throw in the movie question, so I'll read it. He said, "Godfather, best movie ever. No need to explain." So, so if they have an S corp and they get ERC, do they still have to amend their personal tax? Is that how it works?
Yes, it would flow through.
Yeah. Okay. Okay.
If I can just add a point of context,
Yeah.
Your CPA should not charge a ton of money for that. I mean, that is if they tell you I'm going to charge you $7,500 to amend this, I would probably be looking for a new CPA. This is not a complicated process. It's changing a few numbers on a corporate tax return and a couple numbers on a personal tax return. You're just kind of flowing it through. So this might be a good test of whether you've got a good CPA or not. That's all I'll add there.
Got it. Okay, so this ties a little bit into a question from just a second ago where they're saying, they filed for 4 quarters and were only paid for 1 quarter and haven't seen anything for those next few. Is there any kind of investigative process? And it sounds like if you're going through us, they can reach out to us and fill out those out. If they went to somebody else, can they still reach out to us? Can we help in that manner?
So if they did not go through us, we wouldn't be in a position to help. They'd have to go back to whoever helped them, or if they did it on their own, then maybe they could get their CPA to, go through that 2848 process and look at their request their transcript on their behalf, or they could request it themselves. If it's us, we can assist with that part. But, an immediate reasoning for that could be if that 1 quarter was below the $200,000 mark and the next 3 were above the $200,000 mark, that could easily be an explanation for why you're seeing a staggered delay. Another one that I heard this week is the IRS, when the taxpayer called, said that 1 page out of the 941X was missing. And so they had to submit, and then they wondered why they didn't get all the checks at the same time. It's like, well, if it didn't all go through at the same time and the IRS has reached out to you, giving you correspondence that, it had to be 1 page filled in, then that's your explanation. So it could be something, just like that.
Was that? Got it. Okay. Next one is, you mentioned it briefly, but I'll just give you another chance to talk about it. So you mentioned remediation. So if they went with another company and they're not comfortable with kind of where that stands, they haven't deposited the check yet. What kind of service do they just reach out in the same manner? What do we offer there?
Yeah. So they would reach out and just say, I'd like to talk to somebody about a second opinion. That's probably the easiest way to get it on the right track. We would ask a few clarifying questions initially to kind of see what that process looked like. If it's as simple as they signed a form for their payroll provider saying that they were eligible, asserting that they were eligible, and the payroll provider filed their tax returns, we would immediately know that an additional level of due diligence would be required to rightfully claim the credit. If they went through another provider that I won't name any other providers, and they're concerned about that, then that would be us making an introduction to the tax attorney, and that tax attorney would be in a position to assert, hey, here's your best course of action to get comfortable with whether you need to deposit those checks or not. So in that case, you wouldn't be relying on us. We would just kind of stand on the sidelines and wait and see what the tax attorney did. And I do want to emphasize, the tax attorney will do that for free. He'll talk to you for an hour and just kind of get the lay of the land. And, all of his work obviously wouldn't be free, but he'll do an initial assessment to see if there's a concern there. Try to just give that.
And just as a quick reminder, as somebody else had asked about this, Danielle, I don't know if it's possible. Could you get the Silicon Ledger contact info and put it in the chat? I know we flashed it up earlier, but if we could get that in the chat, because that's the best way to reach out. It's that number or that email is best for remediation or for applying for ERC. Is that
great?
Yep.
Thanks, Danielle.
Yeah. So
if I could also add one more thing on the remediation, if the 941s were not signed, reach out. And just kind of as a as a base level, without going into a whole lot of detail, you should have been given, if you already filed ERCs, you should have been given a packet of information to support your claim. And that packet of information should include your payroll records. It should include a calculation and a summary of the calculation and how they got to the payroll amount. If there was a qualification on gross receipts, meaning a reduction in revenue, there should be support for that calculation. And if there was a reliance on the partial suspension or full suspension test, there should be a very comprehensive analysis. And the analysis should include specific state and local orders, not federal orders, specific state and local orders. It should tie and really inventory the modifications that you had to make, and tie those modifications to the specific orders. And there should be a measurement of how those modifications impacted the business. So if you have an analysis that doesn't do those things, then you should reach out, because that means you do not have the supporting documentation that the IRS requires. And again, the orders should be very specific. It should cite what the orders are. It may or may not have copies of the orders because they're extensive, but you should be able to find those orders carefully, or at least reach out to whoever did that analysis and have them be able to provide you copies of those orders. So those are things to look out for. And I feel like I'm missing something, but again, that's the basic.
I mean, the last thing I'll add is there should be a pretty long write-up explanation analysis of the quantitative pieces like Jesse mentioned, and then the qualitative that explain how or why that quantitative piece moved because of the orders. Where we've seen what we consider inadequate is like a single paragraph. A single paragraph is just flat out not enough. Like you're looking, for something that makes sense for a several $100,000 credit and is very well documented.
Agreed.
Yeah. And as Ray was talking, a couple other things came to mind. Sorry, I think this is important, so I want to spend a little bit more time. If you were asked to provide the orders, reach out. If you were asked to describe the ways that you were impacted, and it was essentially cut and paste from what you provided, reach out to us. And again, the other thing that we've seen before is just a complete lack of connection between the orders and the specific facts and circumstances of the business. So I'll give a very quick example, which hopefully everyone can relate to here. All FedEx contractors had their delivery process significantly impacted. And if you think about, all of the ways that you were impacted, I'll just give one example. If you had a lot of deliveries to multi-dwelling units in commercial locations, there were issues with closures of non-essential businesses and closures of mailrooms. That should be specifically cited. What percentage of your routes were to those types of locations? And looking at how specifically those two, again, I mean, we've got hundreds of things that we look at, but those two things should be quantified in terms of how it impacted the delivery, how many extra drivers you needed to cover the same routes, if you needed additional trucks, and so on and so forth. So if it's just a bullet point of deliveries became more difficult, that doesn't cut it.
And the reason we keep harping on this, I mean, it may sound self-serving, and of course, we'd love to work with you, but we're really trying to help you here. It's important because worst case scenario, if the IRS doesn't agree with some of this, then yes, you might need to pay a portion of it back. But if you have a reasonable basis for filing the credit, meaning a sophisticated and comprehensive opinion and packet of information like we would provide you, you're establishing that reasonable basis. If you don't have a reasonable basis, you're going to have to pay back whatever the IRS does not agree with, plus penalties, which could be very substantial. And so that's the focus of, hey, if something doesn't seem right here, we really do want to help you and in your best interest.
Perfect. All right. Well, Leland, I will give you got 10 seconds to try to do this math problem.
I don't do math. I don't
It's just a guess then. Do you have any reference for like the amount of taxes that could be due for somebody who got a $350,000 credit? I know that's almost impossible, but anything reference?
I really didn't even take any math. I would say whatever your effective interest or your effective tax rate that you're accustomed to, I would say that would be your best guess at what it would be right now. But again, we've bumped into so many that have talked to us about net operating losses, carryovers, and things that are able to offset once you have income to offset those losses against. Then all of a sudden that 350,000 might turn into 100. So I can't, that's just a perfect example of why there are variables in play there that are specific to your tax, I guess, situation. And so I wouldn't be able to answer that question, but other than to say, what is your normal effective interest rate? And it's probably around 20 to 25%. And you could look at applying that if you just wanted to be very, very general.
Right. That's a perfect answer. And that's all we have time for. So again, we have the Silicon information in the chat. There's even a link to really quickly see if you qualify. So if that's what you're looking for, it's in the chat. Other than that, thanks so much, Leland and the Stout team, for coming on, answering questions for everybody, being available. We really appreciate having you guys out here. And then a reminder for everybody else, San Diego is in a few weeks, February 23rd. So whether you're a contractor or a buyer, we're going to have options for you in the area. So hopefully we will see you there. And for everybody else who joined this week, thanks again for joining, and we will see you next week.